gold's price action, without any doubt, it's like a thermometer on global economic health. And it's smashing through the red section of a thermometer right now because the price, you don't get a 15% rise in the price of gold since August. That's mad. What is going on? And that's what I'm diving into today. It's really due to the behavior, in my opinion, of central banks around the world and a shift in policy from them away from owning government bonds and into owning hard assets like gold. Now, interestingly, the environment for interest rates at the moment, the Federal Reserve just lowered by 25 basis points. The Royal Bank of Australia held yesterday, which was interesting. But I would argue that right now, not only are we seeing all-time highs in stock markets, but inflation isn't fully under control, yet they're dropping interest rates. Why? Well, because they're so indebted and the cost of their debt is so high that without inflating it away on the back end, they're completely insolvent. And so gold is absolutely rocking. Not only are the central banks buying, but anyone that hasn't studied Bitcoin doesn't understand that there's a new form of digital sound money. And so they're flocking to gold. Now, for the first time ever, the US gold reserves exceed $1 trillion in value. Now, shout out to I'm going to get the name wrong, the Kobe Isai letter. Perhaps I said that wrong. But they had some good charts this week. I'll, of course, link a GDoc in the show notes with all the resources that I've gone through to pull this information together. And they post, this is insane. As the record run in gold accelerates, the US gold reserves just exceeded $1 trillion for the first time in history. The US now holds 2.5 more times gold than Germany, which is the second largest holder. Now, this isn't a podcast about is the statistic on gold owned actually true? Because there's a mad fact about when Fort Knox was last openly audited. Make of that what you will. Like, how much gold did the US government actually have? Well, according to their data, it's just passed through $1 trillion worth of value. But I don't know if that's 100% true. But what it screams to me is inflation risk. The US dollar is weakening. They are printing money and people can see it. And the gold price is the indicator to you that shows it's actually happening. Now, quantitative easing or stimulus packages or whatever they give it as a term, basically more money in the system. If there's more money in the system but the same amount of stuff as before, then the price moves up. The value doesn't change. And this is why we're all so confused. You go back and study the Weimar Republic. People thought they were getting rich because there was more Deutschmarks and the stock market was hitting all-time highs. But it wasn't that they were getting rich. It was actually they were getting poorer and the denominator was being disintegrated. And it's very deceptive. Now, there's also counterparty dangers, right? Why are they buying gold? I'll hit on this later, but the Russian sanctions that got put in place a few years back, the US confiscated all US denominated assets that the Russians owned. This counted billions of dollars, in spite of the fact that they were already trimming their position with that counterparty risk in mind. Now, as I already touched on, go and view things you value whether you normally use a pound or an Aussie dollar or Canadian dollar or US dollar or euro or whatever currency it might be, price it in gold. See what happens. I have started running net asset calculations on my end in gold. So each week I have a figure of ounces. It's like your net assets right now are this amount of ounces of gold. And why is that helpful? Well, it's just another way of looking at value. Now, should you buy gold? That's a great question. Absolutely great question. And by the end, we'll have a good answer to that, I hope. I want to just touch on as well another excellent episode in recent times that I analyzed previously of what Bitcoin did with Danny Knowles and Dr. Jeff Ross when they were looking at the S&P priced in gold over the last 100 years. And what it shows very clearly is there's no real growth. There's a bunch of boom and busts. But in gold terms, if you had the same amount of gold as 100 years ago, you could buy the same amount of the stock market. What the hell? That's not the world I see around myself now, is it?